think we're live. Are we going? There we go. Hello, 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 ladies and gentlemen, boys and girls. How's everybody doing today? It's time for another Bookkeeping with Brian. There we go. Okay. All right, I am Brian Humphrey, one of the partners here at Humphrey Bookkeeping. So it's been kind of a super busy week for me, and I did not really get around to getting slides and a presentation done for the next metric for this week. That's what we've been working on, is that list of metrics for anybody following. But not to worry. So I've had some questions come in from various places here recently. And I've got a list of some of them here that I'm going to answer for the stream today, just in case, you know, a few of those answers can help anyone that's watching. So we're just going to jump right in here. Okay, so first question, we're going to start with a pretty easy one, but I actually get it a lot more than you might think. My client paid me in cash for a job and I didn't deposit it right away. Does that count as income? Short answer is yes, that's income. So cash received for goods or services is going to be income from the moment it's received. It doesn't matter when you deposit it. So as far as how to track it, it doesn't matter if that cash is in your pocket or in your till or in your safe or wherever it is. You're still going to record it. You're going to record it as undeposited funds in your books. You're going to issue a receipt to whoever paid you. And then once you do make that deposit, you're going to move it from undeposited funds into whichever bank account that deposit goes into. One thing on that, because, you know, some people collect their deposits and, you know, you might only go to the bank once or twice a week. If that's how you do things and you're going to be taking deposits or payments, whether check or charge or check or cash or whatever, if you're going to take kind of a stack of things to the bank all at once, make sure before you do that, you make yourself kind of like an itemized list that you keep and also give to your bookkeeper, because you need to know, let's say you make you've got a bunch of little deposits and they all add up to $8,753.22, right? Your bookkeeper is going to need to know to the penny how much every payment was for and where to put it. So you're going to want to know like a job number, or if it's a deposit for a job, they'll need to know where to put that. You know, obviously how much of it is cash, how much of it is checks. Just make sure you make a detailed list of how much money is going into the bank and where every single penny of it goes, to which project or whatever, so that way it can all go in properly. So let's see, what do I got next? Oh, here's a good one. I barter services with another contractor. He does my electrical and I do his plumbing. How do I record that? Okay, so on that one, swapping work is actually an extremely common practice, especially between tradespeople, okay? And especially in the residential revenue stream. It's definitely smart business. It can help you organically grow. You know, you guys are kind of passing each other customers one way or the other. But if you're, instead of passing each other customers, if you're actually bartering the work out to each other, you know, it is smart business, like I said, but the tax man is still going to want his cut, right? So when you are bartering with labor, then even though no cash has changed hands, the IRS still considers these labor swaps, or, you know, these work swaps, to be real income and real expenses. So here's how it works. You're gonna figure up what you would have charged a regular customer for that plumbing work in this situation. Let's say it's $500 for whatever job that you're doing. So that $500 is recorded as income in your books, okay? You're going to put a code onto it, or a note in the memo or something to let you know that it was a barter transaction with your buddy. Then he goes and does electrical work for you that's valued at $600. So you'll record that just like if you had paid cash for the work, okay? And one of the important parts is you want to use the same code or note to show it as a barter swap in both of those transactions in your books. And it doesn't have to be, it can be something simple. It doesn't have to be complicated. You can just put like a note in the memo that says barter swap Joe or whatever the guy's name is, and then an invoice number for that particular job. So using the same code or memo on both transactions creates a clear trail between transactions, and it makes it way easier to track all of your barter arrangements in case of an audit. It is also important that you are not cheating on the pricing, okay? I know when you're doing a lot of bartering, you want to give deals back and forth to each other. But when it comes to an IRS audit, they're going to check to make sure that the work is valued at fair market value, okay? So you got to put real pricing in there. You're probably also going to want, last thing on this, you might want to have some type of just simple written agreement between you, showing what the services for that particular job will be, what they'll cost. I mean, I got to be honest, the IRS has gotten pretty good at spotting these bartering deals, and they really do consider these to be real taxable business transactions, even though nobody was paid anything physically, right? So this is not the type of thing that you want to try to slide through undocumented. Just make sure you're, keeping track of all of it. Okay, next question here. Let's see. My accountant said I should track job costs separately from general expenses. Why is that necessary? Okay, so this is a good one. So tracking job costs separately helps you understand your true profit margins from each job. So basically what it does, job costing, is it separates your direct costs for each job, like laborers and material, subcontractors. It separates that away from your overhead costs, like your rent and your insurance, software licenses, things like that. So doing these things separately, it gives you tons of good data for things like quotes, your true profit margins, and it even can tell you about underperformance in certain areas, right? Now here's the thing that some people forget, is that you still need to allocate a portion of that overhead when you're looking at total job costs and setting prices and things like that. So an example of that would be, let's say you rent your shop and the rent is $2,000 a month, right? Now, you're not just going to pull that $2,000 from one single job and apply it to rent for that month, but every job needs to pay something towards it to make sure that you're staying profitable with all of your overhead costs, okay? So tracking direct job costs and overhead separately gives you flexibility in how that overhead is calculated, okay? So you can decide what portion of your overhead is going to go to your different revenue streams, and it also is going to give you a clearer picture on which jobs are making you better profit margins, and you do that by using, several different types of analysis. Okay, so I am going to stop here for a second on the questions and talk about job costing just a little bit. So not every single business in every single industry necessarily needs job costing from a bookkeeping or accounting perspective, okay? I mean, if you're selling, wind chimes made out of soda cans on Etsy, you probably don't need to track things like that, right? But I have not found a trades business yet that does not benefit from proper job cost tracking. Now, I have said to people before, if you're in the market for a bookkeeper and you don't know if they can handle your trades business, just ask them how they handle job costing. If they can't answer, there's your answer. Now, I know there are probably some bookkeepers will probably get upset with me about that, and that's okay. Usually their argument, which is completely valid, would be that job costing in and of itself is kind of like higher up the accounting food chain, so to speak, than what a bookkeeper's tasks actually are. And that's true. A bookkeeper who does nothing but pure bookkeeping is not involved in running the reports or providing the results of job costing analysis. However, bookkeeping is the kind of the foundation that provides all of the data for those reports to analyze, right? So if you have an inexperienced bookkeeper that doesn't know the principles and best practices kind of around job costing, then they can make small little mistakes that seem like they're harmless, but they actually end up throwing off all your reports. So I'll try to give you an example here. Let's say you're an electrician. Wait, hang on. We already used electrician. Let's say you're a roofer. Okay, you're a roofer somewhere, Louisiana. You're a roofer in Louisiana, and you got a big commercial job. And let's say on this particular job, you got to use like hurricane grade shingles, like architectural, super high impact rating, specialty type of shingles for this particular job, right? And these shingles cost, let's say, 30% more than what you would usually use, your standard shingles that you have in stock for these jobs. So your bookkeeper, not knowing the ins and outs of job costing, takes those shingles, the price for those specialty shingles, just sticks them under materials in an expense account, right? So it sounds right. It's an expense for a job. It's materials for a job. That's where it goes, right? Wrong. Okay, so let's say fast forward 2 months later, you got another job and they want those same specialty shingles, right? Or maybe some different ones, but they need some type of special material. So you go back and you check your job costing report on that first project. But all you can tell from the report is that you had really high material cost on that one, and you can't quite tell why. So what happens here? Well, there's a few different ways that this could go wrong. Maybe you don't end up winning the bid because you see that high material cost. You don't know why it's like that, so you think that you just have higher material costs across everything. So you mark up your material cost higher than you usually would, you end up overbidding, you don't even win the job, right? Or on the other side of that, maybe you just miss out on profit. So you end up, basically you have a chance there, since you're using specialty materials, you can add a specialty markup for specialty materials that would be a line item on an estimate, on an invoice, everywhere in your books. You have a chance for a specialty markup there that you didn't put on your bid, so you end up losing out on profit that was just sitting there waiting for you because you didn't have things categorized properly. So what should have happened in that situation is the bookkeeper should have done one of probably a few different things. One thing they could have done is created a specialty materials or premium shingles or something like that sub-account under materials. They also could have used different item codes to track different material types, so you know on your estimate, hey, this is that special stuff, we need to address this markup. Or even something as simple as putting just job-specific notes in the memos, just to flag those premium materials. It also gives you a way to search for jobs that use those premium materials when you do it that way as well. Me personally, I would have just used, I would have made the sub-accounts underneath materials just because it makes it easier moving forward for every job that's going to use a specialty material. So that's the way I would have done it. And, and just so everybody knows too, if you ask me that question during a consult, the job costing question, I would say something along the lines of, well, really, I guess there'd be two different answers. If you're asking just for strictly bookkeeping, if that's the only service you want from me, then I'm going to tell you that we set you up with a proper chart of accounts so we can track direct job costs and overhead separately. We make sure every transaction is properly coded to the right project. And we do reach out to business owners or whoever our contact is with the business to kind of confirm any transactions that raise questions or seem like they're out of the ordinary from what we usually see. So really just touching base and confirming, those types of things can save you a lot of headache down the road. Now, we do offer also our fractional CFO advisory services. So if you're asking me about job costing on that front, we analyze profit margins across, all of your different revenue streams. We can help you determine kind of your optimal overhead allocation rates to make sure you're putting the right amounts into each stream. And then also we use real data from real jobs that you've completed so we can find under or overperforming areas in areas like bidding and estimates and labor allocation and so on and so on. So those are my answers for that question if anybody was curious. Okay, so last question that I received here, it's a quick one to end with here. This one says, I work long hours and bookkeeping always gets pushed aside. How can I automate it to keep up without falling behind? And so for me, well, the obvious answer is don't automate it. Call me and I'll do it for you. Um, Now, there are tons of people that do like to do their own books, and sometimes they just don't have the time for it, or always they don't have the time for it, or they're getting bigger and they're finding out that they are running out of time for it. Now, while it is true that you can use some types of automation on certain things, depending on your bookkeeping software, of course, we really don't recommend doing much automation at all. And you know, over what I've seen and experienced myself, I have a laundry list of reasons why you shouldn't, but I'll just give two quick ones. Number one, your automation might very well make the same mistake as the bookkeeper in that shingles example. You know, you end up in the same boat, trying to do it yourself as somebody who maybe, you know, depending on the rules that you have set up for automation, the computer might see something and say, oh, well, this goes here, when it doesn't go there at all. Number two, which is the bigger one for me, is that if automation makes a mistake, it's much more difficult and time consuming to find that error to be able to correct it. And that's especially true if you're not a bookkeeper by trade. One of the reasons I don't use automation is because I've seen that happen, had that happen so many times. And I don't like pulling my hair out trying to find, you know, one single mistake that's throwing everything off. And I'm a person that knows where to start looking for mistakes. So, you know, if you're a carpenter, how many hours is it going to take you to find that one mistake in your books? It's just easier not to do it that way. Just call me instead. All right, what are we on time? Okay, so this went longer than I expected, so we're going to stop there. We do still have the ebook and free tips in your email available. If you saw it last week, if you didn't see it last week, I'll explain it again. The free ebook is called 7 Tricks for Trades. I've got the link for that in the description of this video. Now, when you sign up for that with your email address, you'll also get daily tips for trades business owners sent to your email. I think we've got a little over 6 weeks, I think, set up that you'll get something every day. So that's something, you know, just some people don't like to watch videos. Some people don't have time to browse Facebook. They just want, hey, what's the information? Give it to me in my email. I'll check it when I have time. That might be the route you want to go. You can unsubscribe from those emails at any time if you just want to check them out, you know, check out a few days worth and see how well we can help your business. So click that link in the description if you want that. And yeah, that's pretty much all I have for today. Make sure you like and share the video. Follow us and subscribe on all of our social media. I've got contact info on the screen here. Humphrey Bookkeeping is a family-owned, full-service bookkeeping, CFO advisory, and tax firm specializing in working with the trades. If you're ready for help in your trades business, give us a call, shoot us an email, or you can schedule a Zoom meeting through our website, humphreybookkeeping.com. If you don't use Zoom, I think we can do Teams as well. We do free consultations, and all of our services and our pricing are custom built for each client, and it's based on what you want help with to achieve your goals, not ours. Okay, so give us a call, and we'll put your numbers to work for you. All right, thanks for joining me today, everybody, and have a great rest of your week. Bye-bye.